And now what I want to make you aware of is between the income statement and the balance sheet, there are 5 types of accounts in the world. In accounting, there's 5 types of accounts in accounting, and we've got them all. They come from the 2 financial statements. So what are they? Revenue, expenses, assets, liabilities, owner's equity, or stockholders' equity, depending upon if you're a public or private company. There are 5 types of accounts in the world. And this was a long way about to get to the point brought up here. So now we want to know, how do we increase and decrease these accounts? Let me erase the board for just a second, and I want to put something up here that's hopefully helpful. There are 5 types of accounts that exist. Revenue, expense, asset, liabilities, owner's equity. Chance, Fry. Yep. Chance, what's the accounting equation?
Assets equals liabilities plus owner's equity.
That's an O. Hopefully this is helpful. Watch what happens here. How do you increase an asset account? Debit. So this is true for increases, okay? So this describes increases. So how do you increase an asset account? With a debit. Which side of the T account is this asset on? Debit side. Okay, so how do we increase liabilities and owner's equity? Both with credits, okay? So the only 2 we are left with are revenue and expense. How do we increase a revenue account? Kylie? Where's Kylie Weaver? How do we increase revenue?
I don't know.
You got 2 choices.
With the...
Would you rather answer expense? Is that one easier? No. Alex?
Yeah.
Can you help?
Revenue you increase with credit.
Revenue you increase with a credit. So write that down. You have to memorize it if you have to. Revenue you increase with a credit. Austin? How do you increase an expense account? Debit is the correct answer. And recognize these 2 are going to be opposites. Revenue is money coming in, expense is money going out, right, on the income statement. And so these 2 must be opposites. So whichever one of these you can remember easiest, you just have to remember the others, the opposite, okay? So expense, debit, revenue, credit. How are we doing? Do you remember any of this stuff from your last class? Now that it's on the board, it's coming back. Let me double check and make sure that I've gotten everything I want to. I'm pretty close, I think. I can ask this. Let's, by way of a review of the stuff that we've just covered today, name a financial statement. Name one financial statement. Chris Quarter? Balance sheet. You don't have to go in the same order that we did in the first time through. You thought that'd be easiest. The balance sheet. Now, I'm going to ask a different question now, and that is, what phrase appears at the top of every balance sheet? Anybody remember? It's going to, if you got a balance sheet, it's going to be company name, name of the financial statement, sir?
And then by the date or something.
Yeah, as of a date. Because a balance sheet is actually unique. The long and short of it is the other three have another phrase. The balance sheet is a good starting point from the perspective of it's different than the others. A balance sheet is a picture as of a point in time. So if I were to take a picture of you, from here, that was the inventory, if you will. How many people were in class on this day? That's kind of a balance sheet. It's a picture as of a point in time of assets, liabilities, and owner's equity as of a point in time. Okay? So the other three have a different phrase at the top. So name one of those three. Let's see, I'm trying to find who I haven't talked to here. Darren Hooper. That's you, I've talked to you. Rebecca? No, I've talked to Robina. JJ, Katie, Ekta. Joe! I haven't talked to you.
What's the question?
I haven't. Have I asked one? Yes, I have. What is, name another financial statement besides the
Retained earnings statement.
statement of retained earnings. Why do you name the hard one? What's the easy one?
The income statement.
Income statement. Let's do the income statement. Income statement, what phrase appears at the top of the income statement? Do you know?
For the period ending?
For the period ending, generally for the year ending. For the year ending, but that is exactly correct because, so for the year ending would be most stereotypically correct, and we still got a couple of minutes, so you don't need to get too antsy yet. For the year ending or for the period ending, because an income statement, along with the statement of cash flows, along with the statement of retained earnings, all of them summarize activity for a period of time. Stereotypically, that's a year, but it can be a month, a day, a decade, or some combination thereof. But the income statement summarizes activity for a period of time. And so that's useful to kind of understand conceptually some distinctions between all of that stuff. Now, the stuff that we talked about today is that's really review. In a very real sense, I expect you to know it already. Now, clearly, we were a little rusty, kind of as a class, so make sure you review that between now and next class period. Recognize next class period, unless I'm mistaken, is there a homework assignment due next class period? There is a homework assignment due next class period. And where can you find the solutions to most homework problems? On Blackboard, okay? Thank you all.